the trend line strategy masterclass. What are trend lines? Trend lines are lines that you manually draw into the chart that tells you which way the market is more likely to go. So there is an uptrend line, a downtrend line, and a sideways trend line. All right, we all know this. Then we have support and resistances. And I'm looking at certain breakout patterns. What I like using is the horizontal line. That's the first note you want to write down. Support and resistances, we use horizontal levels. So we've got a green line and we've got a red line. This is a support level. This is a resistance level that acts like a ceiling level. Step one, how do we know what direction the market is going on any market? With trading, we need to basically learn to marry the markets that we are in. Now, what I mean by that is we're not taking the trades and holding forever like investors. We are actually learning about the personality of all the markets. When you go on a date, you're going to start with questions. You don't know anything about the person, so you're going to ask questions. What's your favorite color? What's your favorite movie? What do you like doing in your free time? What are your weaknesses? It's like an interview. And when you join trading and you go into certain markets, you want to learn the personality of each one before you start trading them. So to do that, we go into any market. So let's use gold as an example. And to find out about the past and about asking the questions that relate to the past of the markets and of your relationship, you need to go back. Gold really goes back all the way until you see a dinosaur. And the dinosaur is at inception of where the gold price was listed. So you can see here it was around 1975 and it was at $176, which is quite high for 1975. The first thing you want to do is you want to say, what is the general trend line for this market? Now, to do this, the first important thing with TradingView is you click on here where it says Trendline Tools, and what I use is Array, not Trendline. So what I use is Array. So we click on this button, we click on Array, and let's start right at the bottom. And with the trend line, you want to capture the very low of each one. An uptrend line I use as the color green, and a downtrend line I use as the color red. So you can see here from 1976 to 1999, 2001, it bounced on this beautiful trend line. Then we can see another trend line. So now we start where the bounce is, and it starts forming another trend line. So there's point A and point B. Here's point A and point B. And you can continue doing this. Okay, so we'll grab this one. And we can see what the general market is. Okay, so we can't do that one. So we'll click on this and we'll pull it down over here. So what are we doing right now? Are we preparing for a trade? No. What we are doing is we are doing our research on every market that we trade. And you can do this with Forex, commodities, indices, stocks, and cryptocurrencies if you trade them, okay? We can continue with Array. And we start off here at the bottom. And you see how nice the array is. So there we go. So we can see that gold, despite its sideways movement since 2011, it does continue to go to all-time highs. It does continue to bounce off these strong uptrends. So those times where you say gold's not doing anything, we're thinking of it in a present-oriented human perception of the market. And we need to break out of that and say that gold's movement and price is bigger than our short life. So you can see that gold is continuing up. Then we can take a downtrend line. So we'll take the array, we'll take it from the most recent high, we'll drop it down, okay? And we will make it red. So that is what I use for downtrend lines and uptrend lines. All right. So then once you've done your research and you've now basically understood the history of gold, and you can see where it's more likely to go, these lines start to make sense. Once you've done the research on a weekly chart, you can drop it down to a daily chart, okay? And you will find that the rays are still there for you. So you can see them on a weekly basis. So now you can break it up into another uptrend and downtrend. You can grab the high of this. So you have point A and point B. And we have another point A and point B over here. Right? When the price crosses a trend line, it is no longer a trend line. So when the price crosses below this green line, you can actually delete it completely. You want to make your life easy. You don't want interceptions within the trend lines. October 2023, it crossed above, and now it is no longer a downtrend line. So you delete it. You're making life easier for you. Okay? Now, if I asked you before and I said, what do you think of gold? You probably would have said, it's been going sideways for years, right? You probably would have been like, I've left gold alone. And yet, it's at all-time highs. Just think about it like that. Because of our present-oriented way of 7 years of sideways movement, after that, it's broken up and people don't even think about it anymore. So now we are at step 4, action signals. So here is the chart on 4 hours. We still have this trend line that it has not intercepted. So we can expect the price to drop, bounce, and continue up. Yes or no? And let's say that we're looking at this price over here on the 2nd of July. We see our daily time frame trend line is up. Okay, you can even adjust it a little bit just to make it touch the bottom. Okay, and we can see that there is a downtrend line. Can you see that? So is there any highs above here? No. So we take the ray, we plot it, and this is a downtrend line. Point A, point B, and there's a downtrend line. So now what we are waiting for is when there is a convergence between the price, we now expect there to be an intercept above or below. Okay, so now there has been an interception in the price, which means one thing. This is a trigger point. So it's intercepted the trend line, and this means a trigger point. So now this introduces you to 2 new concepts. The first concept is a trigger or action line. Now, we don't know what that trigger or action line was until there was an interception. Until then, both trend lines were safe lines or safety lines. Okay. So what that means is that before it crossed this level, this line was a safety line. This line was a safety line. Then the price crossed up, and now it became a trigger line, or you can call it an action line. So because we had an uptrend here and a downtrend here, we got an action line, which means that this is no longer a safety line. This is your safety line, which means that we can now expect the price to continue up. Okay, so easily you could basically set a long position over here where it crossed. You can set a stop loss below, let's say over here. Okay, so you're giving it some leeway because market makers do like stopping you out, and they do like testing these levels with wicks and with bodies of the candles. So now we have a new safety line and we have a trigger line, which is in action. then we can move this up to a risk to reward of 1 to 2. Or if you wanted to continue, moving up along the trend line, you can hold indefinitely until it crosses the safety line. So let's continue playing. And that's where we are currently, okay? So you can see that the price did not cross the safety line. We got in, and it looks like it's going to continue up. We also got to the point where it was so close to the take profit that you could have used something else for banking a profit. For example, what do I like using for trading? What style of trading do I like using? So the breakout pattern, in this case, if we took the arc and we did a breakout pattern over here, and we made a W formation, just like normal. And we did it according to the strategy, which is halfway between the W formations, and we dropped it down. You can see that it would have hit the take profit price, which means that you now have two strategies that I'm giving you. The first one was the trend line strategy. For when it crosses the trigger line, you can get in or wait for the breakout of the pattern, right? And then once there's a breakout of the pattern, you go along and it continues up to your take profit. Or the second thing is that you continue holding like a medium-term trader until it crosses the safety line. Can you understand how powerful this can possibly be when you're incorporating a trend line strategy with breakout patterns? All right, let's start off with what we use for Supreme multi-trader, and let's do our research on the JSC top 40. So step one, go to the dinosaur, go to the weekly chart. Let's ray it. So we're putting a ray, and you can see it's pretty much horizontal. Then let's take another ray and move it up to the next previous point. So there is point A and point B. So is the market in an uptrend or downtrend? Up or down? Am I using the body of the candle or the wick of the candle? With trend lines, I always use the wick. You can write that down. With breakout patterns, I like using a combination of the wick and the body for where the most volume is. With trend lines, I like using the wick. There was a reason why it went down. We are using a weekly chart, all right? So there's a lot of information, and you can clearly see that the market is up. Then we can say, is there a downtrend? So you can see over here, there was a downtrend, and then it crossed above. So that this is now the safety line. This is now the trigger line, which means that there is a lot of upside to come for the JSC. If we take a long position and we take a position here, we drop the stop loss just below the safety line, and we drag this up to a risk reward of 1 to 2. And even better, we have a W formation. So I hope you can see how powerful the strategy can be for you. So now 1, we have a breakout. 2, we have a safety line where the price continues to bounce up and down. 3, we have the price that is broken out of the downtrend. So this has a higher likelihood of moving up. 89,361. Are we going to buy and go along with the JS top 40 with Supreme? Yes, but we're also going to go short for those little zig and zags that happen with the market. So we're going to continue our research. We're going to go to daily. Okay. We can now take another trend line from the bottom up here to the top, make that green because it's an uptrend. There's no downtrend. Why? Because the high is higher than the previous high. So that means it's in an uptrend. But this downtrend line we can remove, okay? And you can see that now the price is more likely to head up on this safety line, and if it crosses this safety line, it's going to this safety line. So now you're feeling pretty safe that the market has a high inclination of going up in the future. We've done our research with the JSE, GBP ZAR. All right, so we want to see how the pound is doing against the South African rand. We go Forex, GBP ZAR. And what do we do first? We go to the weekly charts, and we're going to go to our dinosaur. Okay, so here's a dinosaur. We don't see anything, so let's grab it from this point here. We take our array, move it up. That was point B, that is point A. We then look and say, is there anything else that we can do from here? Yes. We have another trend line up here. Do we have a downtrend line? We can put this here. There is this high wick down here, so there is a downtrend line. And now we are waiting for the price to break up or break down. This is right now our safety line. This is now a safety line. And if it breaks above this, this will be our trigger line. And where do we put our position? Well, if we take an entry point over here, we drop our stop loss below the safety line, move this up to a risk reward of 1 to 2. 29 Rand, not good for South Africa, but good for if you're in the UK. So 29 Rand is our target for GBP ZAR. And you can see that with trading, you can automatically be an investor by investing in these type of markets that have these long safety lines that you can just hold and have a strategy with, okay? Drop it down to daily. We see pretty much the same thing. So there's nothing else we can do. GBP USD, step 1, go to your dinosaur. Oh no, this looks very different. Okay, now this looks very different. So now, as you can see, from the dinosaur, we drew a trend line up here, right? Then it crossed down, which means that it broke the uptrend, entered into a downtrend, was below the 20-day moving average, below the 200-day moving average. So now if you take the ray, you take it from the high, you drop it down to point A and point B, and we make that red. What do we see here? How's this for a coincidence? Just a few weeks ago, it crossed up for the first time since 2007. So we have our trigger line here. Let's break it down into daily. Let's take this ray, move it up. So we got our trend line. So you can see that we have a safety line now here. The green is the safety line. The red is the trigger line. And remember, I told you that when you drop it on daily, you can adjust the trend line. And now you can see that the inclination, it's likely to head up. So that is the research with the GBP USD. What I loved about telling you this is that we're going to apply this to Supreme Trader and Premium Trader. And I'm going to have those trend lines on the chart so that you can see even more likelihood of whether a trade is likely to work out. You now know how to trade trend lines, run it with a trading strategy, apply it with your breakout patterns. You know what the uptrend, the downtrend, how to plot them from a weekly to a daily to a 4-hour to 30 minutes. You know what a trigger line is, a safety line is. You know what an active trader is and a passive trader. So I've covered everything that I wanted to do. It's funny because it's probably one of the most simplest event that I've ever done, but it's something that whenever you go to your chart and you have a new market to trade, you know how to do your research, you know how to plot your trend lines, you know how to apply them to breakout patterns, you know how to apply that, how I'm going to apply that now to Premium Trader and Supreme Trader. So yes, so to get into your trading view broker, you click on trading panel, you scroll down to where it says Velocity Trader or Harania, and you can click on either of those and you can get into your broker with that. Where to get the research? Leffer, the research is 1, choose the market that you want to trade. 2, put it on a weekly chart. 3, put your trend lines up, as I told you. 4, drop it down to daily. 5, drop it down to whatever you're trading. and then have all those trend lines in relation. Can this be applied to quick trade MT5? Absolutely, Rion. There are trend lines and annotations and drawing tools that you can use to put it onto TradingView. Okay. It is usually said that you should always wait for a pullback after breakout. Is that always necessary? So that is when you are a conservative trader. When it breaks out and then it retests, okay, but retest must also mean a bounce off it. So it doesn't just retest it, it also bounces off it. If the crossover is near 200 SMA, which takes preference? It depends on the motion of the markets, because if the 200-day moving average and the 20-day moving average are close to each other, okay, then if the price breaks up or breaks down, it is still likely to just move sideways. If the 200-day moving average is way above the 20-day moving average and the price has just broken below the 20-day moving average, it has a higher likelihood that it's going to come down because it needs to come to equilibrium. So think about moving averages as elastic bands. The further they are away, the more likely the price will come back to a type of equilibrium. And that's why Fibonacci does work. That's why pivots do work. So if we play trigger, okay, so there's our trigger. Then you could put your short position. You can put your stop loss above high if you want. You can put your take profit to risk reward 1 to 2. I love that you're all math traders because you understand what I'm saying. I don't need to start from scratch. So it broke below. You can see the 20-day moving average is quite far away from the 200-day moving average, so it has a high likelihood of dropping down. So if we continue to play, you got your safety line over here. The red line is safety line because we are shorting. You got your trigger line over here, which is now null and void because it crossed. So you can see how it plays. Now you can see the moving averages are quite close to each other. Okay, so now what you'll notice here, Jeff, is that, let's stop, it crossed the safety line. So you got out at this point and you got in at this point, which means that you paid the fee for getting into the S&P 500. You lost time and you lost your fee, but you went with a strategy of saying that if it crosses above my safety line, I need to get out because now the market has a higher inclination of moving up. Does one take geopolitical news into account? Basically, all taken into the price. So when you see the price moving erratically, there is a likelihood that something happened in the world, whether it's geopolitical, whether it's economical, whether it's macroeconomical, microeconomical, whether it's FOMC, whether it's interest rate decisions or the NFT or anything like that. So, or a black swan, financial crisis, economic crisis, or a debt crisis, or what I think that's going to be a massive crisis. I don't know in the next year or two, but there's going to be a derivative crisis, because if you can imagine how many markets they are taking with stocks, think about it like this. How much money is being spent, bought with longs and shorts on a derivative side of point of view, with gearings of 1 to 500, 1 to 100. Like, we think that $5 trillion debt is problems in America. Just think about how much money derivative-wise is in the market at any one time. We are talking hundreds of trillions of dollars. And I'm watering that down to what that number could possibly be. It's ginormous. You know what to do now. You've got your notes. This is to even better trades and a better experience for your trading with Premium and Supreme Trader.